Getting wrecked as South Korea's largest cryptocurrency exchange was reportedly raided by prosecutors. Upbit suspected of fraud for allegedly selling cryptos that it did not actually hold. Bitcoin sinking suddenly yesterday, now down about 10% since then. So even though the crypto universe is hoping for a moon boom next week at the major blockchain conference in New York, we thought this would be a perfect time to channel Kenny Rogers for a crypto class on not when to HODL them, but when to FODL them. Our crypto brawler Brian Kelly's over at the Plasma with the lesson. Beeks.
Yeah, sure. Thanks, Melissa. So you want to look at these things and have a thesis going into them. And of course, my view on this entire asset class is, one, it's a brand new emerging asset class. It's a disruptive technology that's going to change a lot, that has the potential to change a lot about what I do every day, a lot about financial services. So that's my general thesis. But when I'm trading, I also have catalysts that I'm looking for. So number one, if you have a catalyst coming up and the stock or the cryptocurrency is not acting the way that it should or as expected, then you might say that the thesis has changed. That's your first warning sign. Number two, new information comes out. We all know that stocks and currencies move on new information. Frankly, that's really the only way they move. Most things are priced in until that new piece of information comes out. When that new news comes out, you watch the direction of the cryptocurrency, and that'll give you the signal that you need. So if there's new information available, that's number two when you start thinking about FODL. And then always, 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 when I trade, I have a predetermined stop. So I know going into any trade what my risk reward is. I always look for, I risk $1 to make $3. That's the minimum that I will do. So if your predetermined stop is hit and reached, then you got a FODL. So let's just take a look at one example where we did this, okay? We're going to the next chart here, which is Litecoin. Remember Litecoin had this massive run up, right? That was in December, or November, December. Then we came down, and then we had another little head fake here. So let's clear those out, and let's take a look at this head fake and what happened. And I want to draw a line because you had an uptrend, okay? And you had a thesis that perhaps Litecoin was going to be the test net for Bitcoin, that it was going to have a lot of different additions to it, and so you want to be long. But right here, that's where you had a problem. That's where you start to need to think about FODLing, right, instead of HODLing, because not only is perhaps new information coming out, but now you've broken a trend line. You've broken a predetermined stop area. And it looked like what happened after. We just actually pancaked there. So that's when you FODL. You got to have those three elements going.
BK, what do you... So I'm not sure if this video will be flagged. I'm not going to interrupt. I got enough of the comments. I'm wearing sunglasses because I don't even know if this will be flagged on YouTube. But he brings up some great points, and my opinion, and by the way, it's a little old, so you can see that there was actually a rebound. It did have a little dip. We're still waiting for this crypto conference that's coming up. And so my opinion on this is you can do all the trading you want. It's fine, but just realize that if you're constantly going in and out, you could be paying taxes if you live in the US. I don't know where other people live and what the tax rules are, but just be familiar with that. For me, I've already decided that I'm going to hold my crypto for over a year, and I made purchases at the market cap when it was 250. I've purchased below that, and I purchased above it because I've already made the prediction that crypto is going to go to $1 trillion. And if you've been watching this channel, I've made plenty of arguments why I think the market cap will hit $1 trillion. So I'm not trying to time the market. If you haven't bought in, dips like this is a good opportunity to buy in a small amount and be ready to buy if it does go below 250 billion, which was the lowest point in April and I believe also in February. We're right now still setting above 400 billion market cap, and it could be a recovery, but it could also just be a trap and go down more. So my opinion is if you're in this long term, it's no one has a crystal ball. No one can predict this. So I'm just holding, and I am not doing any kind of folding. I think if the market goes above the all-time highs again, the 20,000, then I would start to kind of sell, and I'm hoping that will happen in a year from now, so I don't have to pay short-term capital gains tax. But no one really knows, so hopefully this video doesn't get flagged, but if it does, it doesn't matter because I'm wearing these baller glasses. But let me know your thoughts and opinion on this, but I'm easily holding, and I am very confident that the market cap, Like I said, by the end of the year, we'll be over 1 trillion. So this is still a good time to buy in. But like I said, I've already made a lot of buys under 250 billion. So I feel comfortable and I have a good amount of cash to continue to buy. But let me know your thoughts and what you guys are thinking. And I hope you guys like the shades. I'll talk to you guys soon.